Hi, this is Simon with Trade and Perform Coaching, doing the trade review for Friday, the 29th of August. And really tonight, I'm really talking more about what to do when the market isn't offering the trade setups that we're looking for to get paid on, and the distinction between running a trade calling service, right, and actually helping traders become consistently profitable. So one of the big challenges for any trader is to keep up and balance between finding opportunities and how do we say this? Finding opportunities and then not getting chopped up when the market slows down, right? And it can be frustrating because particularly for traders with smaller accounts, right? What is the pressure that we're constantly balancing? We're balancing between doing the right thing, looking for the trade setups, staying disciplined, and what do we have? We have a small account. What do we want more than anything else, right? Why is anyone in trading? We're all in trading to make a lot of money, not a little bit of money, a lot of money. If you're trading futures and you're looking to trade futures to make a 10% annualized return, get out, man. It's easier to do it. Just trade the non-leveraged index, the spiders. It's a whole lot easier to do that, right? But we're in this to make a lot of money. At least I know I am. And so what do I know is the most dangerous thing to my trading? Getting chopped in a slow market. Now, is it frustrating not to trade a slow market? Yes. Can you imagine, in my particular case, every morning I get on and there's 20 to 30 guys in that trading room, and I am telling them, hey, over the last 2 weeks, number one, I've been saying, don't short or very limited shorts, right? Number two, what's the other thing I've been able to say is, less is more. Okay, so when you're saying that to a room of people and the market keeps grinding up and up and up, and I'm not getting long entries, right? Almost every single day for the past 2 weeks, I've come in saying, I'm looking to the long side, right? I'd like to be long, and these are my entries. My entries are usually haven't been dramatically below the market. Sometimes they're only 4 or 5 points lower than where we opened, and I can't get the rotation down to get the entry, and I watch the market go up all day without me. Now, from my standpoint, I actually have a bit of anxiety, performance anxiety when performing in front of others, right? That's been something that I've actually been really frustrated with, but not nearly frustrated enough to break my discipline, because where I make my money and pay my bills is from my trading and not from the coaching that I do, not from the live market preview. I make my living as a trader. Okay, so all that being said, right, let's talk about some of the areas where actually instead of where things go right, let's talk about where things can go wrong psychologically. Okay, and what I want to cover first of all is how did we get to this point? Well, first, I've pulled up a larger time frame 30-minute chart, and what I would like people to realize, and I assume if you're a great trader, you're probably not learning from me anyways, and so I'm not worried about this should be obvious to you, right? So first of all, the range was pretty good in here. If you waited for rotations down, we got these beautiful rotations back to the upside. Really, life worked pretty nicely. We were getting sell-offs. This was the Russian deal. I believe this was the Russian deal. We got some volatility in this area. Notice this is a 60-point range and push to the downside, right? Then notice all of a sudden, starting about, even on this push, even on these moves to the downside, right, it was really very limited in how far they moved down. And one thing you can notice very quickly, we went from a nice wide range here, okay, to all of a sudden our ranges got smaller and smaller and smaller, right? We had this was the Russian news. I stand corrected. This was the day we had the Russian news, and after the Russian news, we pretty much went into comatose city. That was back on August 18th, and we've just been in these small, dry, slow grind since then, and then now that's even just come into a small sideways trade, okay? Look how much easier it was to make money over here if you were patient than it is in any of this. And the reason why is, let's say you took a short here, right? Let's say you were patient and you waited for a long. Well, in here, as everyone knows who's been in the room, we never got a rotation lower to get our long side entry. Okay, so what does that leave you with? Well, short entries kept setting up, right? You have zones above, you have points of resistance above. The market keeps hitting those areas above. So that ends up giving you just a handful of trade entries. Well, one of the things that I advocate very strongly in my coaching and within the trading room, and really to anyone who'll listen, spreadsheets will tell you where you're making money and losing money. And I can tell you, in this entire period of time, right, all of this, okay, longs have been easier than shorts. I realize that's not a news flash, right? But it is a bit of a news flash in terms of if you simply waited for the proper rotation down, and we've had them, they've come into zones that have been in the trade plan prior to the open, right? If you waited for that, given you didn't get them every day, we weren't taking longs off the open, we weren't doing the ultra aggressive, I'm just taking the opening print and going, right? But you didn't have to. If you sidestep the shorts, which I've been preaching for a couple of weeks now, sidestep the shorts, right? Wait for the rotations lower. You've been paid, and I've actually in the room called those trades in real time. So I know for a fact that guys have been getting paid, right? Who's the other group of traders in this that get paid, right? Well, I can answer that question. Guys that have just gone and reverted to, I'm going long right at the open, okay, and I'm going to try to push this trade up. Those guys have actually done okay, really, until this past Friday, right? You'll know, but where do those guys get in trouble? That also worked back here in this area. Well, I can answer that question, and I'm certain that there's someone out there listening that has experienced this as no shock. You'll have guys that make a lot of money in this right here because they keep pressing their long sides. They buy basically any small dip down. Then we get just a week or two of downside pressure, big downside pressure, and all of a sudden the guys that were getting rewarded for holding almost any downside move, right, that were getting paid in here, they give it all back in here. Why? They have no discipline, and they actually have no strategy. The strategy of I'm just buying the open and I'm not going to sell until it pushes back up, that's not a strategy. That's simply you're in an ultra strong bull market, and the ultra strong bull market is bailing you out of what is otherwise, generally speaking, poor trade entry, right? So let's go over so those are the guys who are just taking any basically opening print and pushing up. Those are the ones making money. They're the same guys that are losing money over here. So let's continue this rotation over for a little bit and talk about the other part that's frustrating. And I actually want to read from Brett Steenbarger had a post in his blog today, Trader Feed, and he had written a piece about quiet markets and why they often reveal the best traders, but also they reveal the worst traders. Quiet markets offer less, and this is, I'm reading directly from his piece here. It says, quiet markets require patience, and they offer less directional opportunity. For competitive traders eager to make money, this can be a bitter experience. Okay, so what he's saying is, if you cannot stand back and let the market set up for you, you end up chasing and you end up getting smoked. And I'm going to show you exactly how that happened here at the end of the day for one of my traders, okay? He goes on to say that it's not surprising that in quiet markets, overtrading occurs for a lot of less experienced, less disciplined, and less mature traders. Sitting, staring at screens, and following markets tick by tick without actively trading is exceedingly difficult for many people. The more successful traders step back from screens and engage in other aspects of trading process: research, idea generation, performance review. The less successful traders convince themselves that they see directional patterns setting up in the tick-by-tick action and, in common parlance, get chopped up. What is equally difficult for many traders is the patience required to let trades work out. This is what traders commonly call the pain of gain, restraining oneself from taking profits too early in trades that have not yet reached their targets. To sit still while market gyrates invites the fear of missing opportunity. To not act while trades are working invites the fear of reversal. Both forms of non-action place traders in the situation faced by the subjects in the above studies. He had referenced people who had lost significant chunks of money, okay, trading sideways, chopping markets. And this is this area in particular. So I want to jump into the late afternoon on Friday. So first of all, as most people know, I advocate trading for the most part between 8:30 and 11:30 at the latest, right? I think it's the easiest to make profits. We get to take advantage of this counter rotation that the market offers almost on a daily basis. This is the pattern that you will see 80% of the time in markets. We curve back up from the downside, just like we did here. We get into the reversal hour, and it pushes back up very nicely. Okay, that's number one. So what I pointed out in the morning in the live market preview, and I posted that actually to the YouTube channel. I didn't post it on the blog, but what I said was basically 2K was the bogey. If we opened above 2K, right, up near this Globex high, that the first push down into this area or into Thursday's high should generate either from this point if you're aggressive or this point if you're less aggressive, a push back up. But the caveat to that was that we traded above the year-to-date high and then pushed back down. The market, first of all, opened below 2K and then pushed lower from there. Secondly, we're in the middle of summer on a Friday afternoon. This is a direct note to my clients. There actually was a very small point of support resistance right here. I didn't have it on the chart. And no one actually asked me why, but I'll tell you why I didn't have it on the chart. If I place a zone here, right, and I place a zone here, and I place a zone here, it basically means every 1.5 to 2 points, there's a zone. It doesn't help anybody. So I always make the choice of setting my zones back a little bit for the larger stretch. Why? The majority of the year, when we're having larger volatility, this pays me and this hurts me. In smaller volatility markets, while this may pay me, it simply sets me up if I start taking it for taking losses as soon as the volatility expands, and it will. Okay, so let's get back to our trader here. Our trader actually caught the short side and did pretty nicely here. I believe he picked up 3 points to 4 points of this downside move. Well played. He noticed that it opened below 2K and was able to push those trades to the downside. Well done. But then our trader did not take the trade from here. Good enough. There was no zone here to take the trade, right? If you're following my trade plan, there was not a trade entry there. Okay, no problem. And he also sidestepped, right, taking the long because of lack of rotation. He did great until we got right here. And he saw that we closed above this 2K, and he said, oh my gosh. And what he said was, the market's going to take off without me. Now remember, our trader already got a short for the day in a slow summer market, and he was plus 3 points. Right? And so what he said was, hey, we're breaking above 2K. We're probably going to hold. I've been watching it. We haven't broken back below. I'm going to take it here, and I'm just going to risk 2 of my 3 points so I walk away a winner. So he took the trade. He was unwilling to wait for a pullback. And what did the market do? Came back and took his 2-point stop. Okay. Next, what happens to our trader? He's pissed, number one, right? Because first of all, he realizes his trade location should have been the top of the zone. So he sees it almost get to the top of the zone and balances. Now, note, it still hasn't touched the top of the zone here, right? He's just frustrated at this point. He's only up a point for the day, and he has spent 5 or 6 hours at this point trading. He's got $50 per contract to show for his effort, right? So then he goes, you know what? Now it's going. It's come back. It's test. It's trade sideways. I'm going to take it one more time, but I only have a point left, and I don't want to go negative. Now listen to what that trader psychology was. He didn't say, let me take this trade because it's rotated back to the zone. I'm going to put the proper stop on and take the risk. What he said was, I'm going to negotiate with the profits I have for the day, okay, in hopes that we're going to break higher. So what did this trader do? Instead of waiting here, he took it right here. Now let me tell you, this is something that no one listening to this video has not done this, including myself, right, at some point in their trading career. And then he tried to do a deal with the devil. He took it again at 1998 after getting stopped out and used a one more point stop. It's like one more point would have kept me in the trade, and now I get the write up, only to watch it come. And what does it do? Tags him to the tick right there, and then reverses and goes back to the high of the day. Now, a couple of things. First of all, the correct rotation is 4 1/4 to 4 3/4 is the average rotation in ES. That is why you'll always hear me talking about trying to get a proper size rotation and moving my stop behind. Why? I want my stop to be so far in excess of what this average rotation is that only an excessive strong move to the downside or to the upside will take me out of this trade before I get a chance to get my profit, which my profit target, right, is not always that big, especially my first scale, right, is not that big. I have very high odds of hitting it. What's key to my trading plan is that I maintain a 70 to 80% win rate at the zone, right, with proper rotation. So this client ended up getting stopped, right? He ended up giving back all his profits from what was otherwise a brilliant rotation up below 2K, right? He gave back 2 here, 1 more here, and then to really just screw his day pretty solidly, he watches it go all the way right back up to where had he just held this trade from 2000 to start with, he would have ended up with a 1 or 2 point winner at the end of the day. And what was he saying? I knew it. I knew that if I had just held onto that trade originally, um, I, I, uh, I would have had a profitable trade. Let's look at the way another trader would have done that properly, right? If you determined at this point we were probably going to rotate higher, right? And you look and go, okay, 2002 is my, we were just shy of 2002 swing high. If at least, right, even if I wasn't using zones, I just subtract 4 points. That puts me in at 1998, right? But remember, 4 1/4 to 4 3/4. So that brings you back to actually 1997 3/4 is 4 points from the actual high. And then you got to add the 1/4 to 3/4. So that's 97.5 to 97 1/4, and 97 was the low. If this guy just comes in and goes very calmly, I know what the average rotation is. I realize we're not in a very volatile market. I'm going to wait for the exact 4 point to 4 3/4 point rotation. He would have gotten in right here, and instead of crying over giving back his profits, well-earned profits from the morning, right? Despite the fact that I discouraged people from trading the last hour of the day, that same person would have ended up with a almost 5-point gain to the upside. Okay, and that's the difference between being disciplined and patient, and being and lacking discipline, and being impatient and trying to gauge in a slow market, trying to read price action that does not exist. Okay, this is just small traders handing off to small traders back and forth is all this is, and nothing more. Okay, so keeping with that concept, right? If we look at the market as a larger picture, right? Because the trader's argument is like, but look, it's been 2 weeks. We haven't gotten any rotations. That's true. Let's go look at it really quick. Okay, this was back in July. You can see we had nice, healthy, fat rotations. We were getting a lot of this pattern almost every single day, right? And even on days where we weren't, the following days we're offering strong plays up. As long as you focused on this upside from locations lower, which I've been hammering day after day, there's really been pretty good trading opportunities back to the upside, right? But then all of a sudden notice that on the 18th, this was the day we had the Russian deal where I was pounding the table, literally pounding the table. Trade to the long side. NQ is long. Trade to the long side. If you look, our volatility has almost completely disappeared. Compare this to this, right? Compare this to this. All of this was better, okay? We've completely lost our rotation size. And guess what? That's common in August. I want to show y'all something here. This is last August. Let's go back to last August really quick if we can. Okay, given we had some downside moves, okay, but look at all of a sudden, look at how small the days got here. These are intradays. They were directional. They were choppy. They were not very volatile, okay? They pretty much went in one direction with lack of rotation, right? This day was pretty much chopping up. Then this one got chopping down, but there was no two-sided market in this. It all kind of picked a direction and kind of went with it, okay? And the range daily was really small. Look at the ranges here. You can visibly see it. I realize I have this compacted up, but look at the ranges in all of this. This is July, right? And July is pretty slow, right? But August got slower, okay? And then it came to a pretty much a dead grind here at the end of the month. But check this out. And then you'll notice even into this carried into early September. There's September 11th, right? But lo and behold, look what happens after September 11th, man. The ranges get nice and fat. We get big up days. We get decent down days. We get counter trades up and down intraday. All of a sudden, the market starts working really nicely in both, not only that, but in both directions, right? Versus either straight down or straight up and lack of range, right? These are sub 10-point ranges here every single day. This is coming, and not only that, and I'm not going to do it here, but if you'll go back and look at every year, it's the same story pretty much for every single year, day in, day out. So if this guy simply would have said, hey, we're in a slow market, my strategy is to wait for this. I know I'll get paid in this environment. I'm cool with waiting for this environment. It's not a problem whatsoever because I've learned over the years to generally sidestep late August, right? I know come early September, I expect some really good days. As a matter of fact, if you look, right now as I'm doing this recording, we're trading above 40.86. Look at the move from August 29th right here, right? Here's the first trading day of September, is right here. We came down, but then if you look from the first day of September and look at the first 15 days, we pretty much shot straight up out of September, right? We're trading above 40.86 on NQ. As long as we hold above 40.86 overnight and into tomorrow, we've been balancing in a really tight range. I'm going to bring you back to our current market. Okay, we've been balancing in a really tight range, and we've obviously held above what was a former resistance point here. Here I can draw this out for you for bigger picture. Okay, between here and here. Okay, you can see we've backside tested that. We've held above. We've spent about 5 days trading absolutely sideways, and we're due for a breakout of balance. Now, everyone thinks that break should be to the downside, but there's nothing that says that we can't get an extended move and tack on another 100 points on NQ to the upside. Okay, that's number one. Number two thing that I want to discuss, and again, this is not I'm not advocating someone drop one market and go trade another market. And what I'm going to talk about here is CL for a second, okay? But taking the time to learn a second market can often pay extremely nice dividends. So I want to go over CL here for just a second from the last couple of days. So this is CL. Actually, let me just pull up just a fresh chart all the way around. Okay, so this is what we're looking at here, guys, is a CL chart. And the first thing that I want to point out on CL is that intraday, you'll notice, and given it's a 24-hour market, right? But even within our U.S. trading session, the first thing I'll notice on this is that we've been getting great up and down rotations in CL for not just days, but for weeks now, right? So if you've been in the room at all, you know that I trade CL actually quite actively, and it's one of my favorite traders. Okay, the reason that I bring this point up is that having not only a portfolio of trades, right, but taking the time to master not just one market but multiple markets, right? Why do you need that? Well, because ES sometimes dies, sometimes NQ dies, right? I've been trading these things since back in the early 90s. Okay, markets have crashed and risen multiple times in my career. And I know that there are times when I need to switch off of one market and go to another market. Why? The trading's better in the other market. Okay, so that's the first thing I want to bring up. Secondly, there will be a time when ES returns to this, right? If we take a bigger picture at CL, and let's go to a 240-minute chart here. See if we can pull the data on here in a reasonable amount of time. Okay, the first thing you'll notice, first of all, CL, the up in this period of time was much easier than the down consistently, right? We obviously broke at this point, and after this retrace, basically at this point right here, right, up until this point, about this point in July, I was trading CL long only. Then I started trading it both sides. Actually, once it got down into this area, I've been trading both sides, and I missed this short call. I just didn't see it coming, quite frankly. But that's beside the point. Even trading it long, I did okay. But what you'll see here is that, first of all, even this market goes through periods where we go through tight consolidations, right, and then wide directional changes. Tight consolidations, white fat moves. The reason why people, in my opinion, lose money in CL is because they can't change quick enough from the consolidation phase where we basically just whip back and forth, which for me is actually my strongest market, to these markets where we trade, where we go directional, right? And what traders do consistently in CL is they underestimate the amount of directional and how hard the move can be when it gets directional, or the opposite. They constantly try to capture a directional move in CL, and when they get it, they get paid big, right, which is cool. But the problem is all the times that it whips back and forth like this absolutely murders them in CL. What's the point that I'm bringing up in all of this? Number one, all markets have their phases, right? Number two, sometimes there's markets that are trading better. Some markets are trading better than other markets. In this particular case right now, CL is trading a lot better than ES is. Also, there are certain skill sets that go better in certain markets. For example, in momentum-wise, when CL tends to break out of a pattern, and I'm going to break this down to a 30-minute pattern, and I'm actually going to build this chart here. I usually don't stay on this long, but I really want to emphasize something here. If let's say I'm a momentum trader, right? What I'm looking for is breaking of wedges and breaking of key points, high and low, intraday and CL, if that's what I'm doing. I happen to try to capture both. I just tend to be much better at simply capturing the, I simply am better at capturing the sideways trading than I am the directional trading. Why? Because once it breaks directionally, I tend not to get it. I stay disciplined. I wait for a retrace to get an entry on CL. I have a particular setup. And if I miss it, I keep my hands in my pocket and I go, well, I missed it. No big deal, right? And because I know that it'll set up again. So if we go to a 30-minute time frame here, actually, the chart behind this sets this up rather nicely. I've been setting this up for days, so let's see if we can break this out. I'd been setting up for days that we'd actually been getting ready to break to the upside. Let's see if we can spread this out a little bit. Okay, the first thing that I had pointed out over a period of days, we'd been getting a series of higher lows on the 1 hour chart. As you can see, we've gone into a series of higher lows and equal highs, right? And this was creating a wedge right here. Then you can also see we broke out over that wedge and we backside tested it. Now, I only trade CL during U.S. market hours, okay? But as you can see, we backside tested after we broke this wedge right here. We can take this down to a 15-minute chart so you can see a little bit clearer. Okay, you'll see here, this was this wedge right here. This is U.S. trading hours. Oh, right here, here's the 8 o'clock. This is London high. This is prior day's high right here. You can see we broke out just after the open. We came back down. We backside tested, right? So carry this through, pushed back up and held above that London high and that prior day's high into Asia, right? And then notice the key here. Ignore, these are support and resistance zones. Ignore them. They obviously worked, but not pertinent to our conversation here, right? But the thing that I want to point out is this is our next day's open here. See this right here? This is our 8 a.m. open on the 29th. Okay, and remember, this is prior day's high. So you now rolling into the 29th, right? So let's just move this up here. Okay, so that's not what I wanted to do. I wanted to move this. This is prior day's high. This is London session. Notice during London, we'd gotten above prior day's high, right? We opened. We never tasted below prior day's high, and we were essentially trending up out of Asia, pretty much straight up. And on a trend day, one of the characteristics that you'll notice is that when we trend out of London, not always, it's a rule of thumb, we tend to continue to move higher. Now, in my particular case, I trade after 8 a.m. and I most likely would not have gotten I had a scalp set up here, but I would not have gotten a normal long position entry because it would have required, at least for my setup, right, a backside test of this high like we had the other day where it pushed down. It gave me a chance to get in. And again, CL is very tough. It requires a quick hand, so it's not just as easy as, backside test and it goes up and you make millions of dollars. I scalp CL continuously, and it's not by any means an easy trade. It requires a very fast mind and a very agile trader's mind. But my point is this: CL actually provided great trading opportunities over the last 2 or 3 weeks, where there's been an abundance of lack of opportunity, right? It requires learning multiple markets, right, and diversifying both your knowledge. Not just, you have to become an expert in the markets you're trading, but you need to become an expert in more than one market and in more than one setup, so that when the market shifts or if the market dies, either way, right, you have a plan B to go to where you can continuously generate money. But what most traders I have experience with and speaking with, right, what most of them want to do is they want to find one market, ES, NQ, you name it, and they want to keep wringing its neck and forcing it to pay it in months when it won't pay. August is traditionally bad. So in combining all this with what Dr. Steenbarger has been speaking about, I would like to see traders pushing not only just to learn one market, but then to learn a market outside of there. Gold market trades well. Oil trades well. Do you have to be well funded to trade these? Yes, absolutely. No question about it, right? And then the second part is, if you can't do that, if you don't have the capital to trade those markets, or you don't have the mindset or the ability to trade those markets, realize that until your market, the one that you trade that pays you the money that you have to make, right? Until that market is showing you clear signs of volatility, and if you're a day trader, you're a volatility trader, okay? That means you have to step back and go, I'm going to wait for the volatility to return so I can take advantage of the rotations and get paid again, right? But when you demand that your mind be able to constantly shift from small, tiny ranges to big ranges, and that you think you're going to be able to put all that money in your pocket and you're going to be able to make that shift on a day-by-day basis, life becomes very difficult. So in my particular case, I default to higher volatility markets, choosing to ignore lower volatility markets, right? Because I have another method through which I can make money, right? And then I also have the discipline of knowing that even if all the markets died across the board, not to take risks and not to trade with stops that are so tight, and not to break my trading rules so as that I don't dig a hole while it's slow, so that when the market does expand, like it will here in September, I'm almost 100% confident of that, right? I can start from the top. I don't have any hole to dig out of, and I get paid immediately. So anyways, I hope that this made a little bit of sense to traders out there. We are still in a tight range. I expect us to break out of that tight range as early as tomorrow. We've been consolidating for 5 days sideways. Anybody can learn how to trade, okay? But not anybody can make money every single day. It's not realistic. Be nice to yourself. Have a written trade plan, okay? Understand what your risk parameters are, not just what you can afford to lose, but what the market demands in terms of a safe stop that'll keep you in a proper setup, meaning you have the right setup and you've used the right stop to let that setup work, right? And make sure you actually have an edge, that where you're taking your trades actually has a bona fide edge. And then the last piece I'll say is, if you're using stochastics, if you're using any trailing indicator that uses trailing information for intraday trades, and you were trying to make money day trading off a trailing indicator in ES, good luck. It's a crutch, and it's not only is it a crutch, it's a broken crutch that'll lose you money. Price action is all that matters in ES. Price action and trade location. Everything else is just side dressing. So anyways, guys, I hope this helped. Anyone's welcome to email me at tradeandperform@gmail.com if you have any questions about one-on-one coaching, or if you would like a trial, a 7-day trial of the live market preview, please send me an email, and I will be more than happy to extend you an invitation to try the room out. I hope everyone's having a wonderful day, and we will see you all bright and early in the morning. Good night.